So moving on to our investment ratios then, all right? So the investment ratios are earnings per share. How much have we as ordinary shareholders earned per share this year? So that is going to be our net profit minus the preference dividend. So you can see again, we're using that preference dividend figure all over the number of ordinary shares. Dividend per share then, so total dividend minus the preference dividend. So again, you can see it coming in minus the preference dividend all over the number of ordinary shares. Our earnings yield, so that's going to be our EPS all over our share price. Now, just with that, the earnings yield, you may have to go and work out the EPS first. They don't have to give it to us, all right? So with the likes of earnings yield, it's a nice way for them to build up the 10 marks that they're going to give. So we get the EPS first and then divided by the share price, multiply by 100 because it's a percentage. Dividend yield, your dividend per share all over the share price, multiply by 100. Your price earnings ratio then, so we have our share price divided by the earnings per share. Now, a couple of things on the price earnings ratio that we need to keep an eye on. With the price earnings ratio, you need to be very clear on what way they can ask this, all right? So price earnings ratio, normally speaking, we look at the market price and we divide it by our EPS. So as we have in our formula there, okay? Share price divided by the EPS. They can put in a little line where they say at the current payout rate, okay? Or the current dividend payout. In that case, we're going to divide it by our dividend per share. So you just need to be careful that you read that properly. Okay, so if it says that it's going to be my market price divided by the dividend per share. So if that comes up, you need to be able to work out the dividend per share first and then come back into that. Now, what I would keep an eye on here is how you answer this. What does the price earnings ratio actually mean? It's the period of time to recoup the value of the share at the current earnings rate. Okay, so make sure you answer that properly. It's the period of time in years that it would take for you to recoup the value of the share. And then the last one, your dividend cover. So again, dividend cover, a little bit like your interest cover, your net profit minus your preference dividend all over the total dividend minus the preference. So it's how many times would you be able to pay the ordinary dividend this year? All right. So what money is left over for the ordinary shareholder? The net profit after the preference dividend has been paid, divided by the ordinary dividend that's going to be paid out that year. So that's very quickly looking at the various different ratios and where you're going to pull the different pieces from. Okay, but really important that you're really familiar with that. With the dividend cover then, it's times, same as your interest cover, times price earnings ratio, years. So make sure you have the units correct that you're going to give on those. That's really important.